Welcome to Fomo Consulting for your daily AMC stock analysis on Monday, April 19th. Ladies and gentlemen, we are in the final countdown. We'll go through a few key statistics and hopefully you'll find this video entertaining and informative. And if you do, please like, share, and subscribe. Let's get into the video. So, great day, had a green Monday. It's always good to start the week out in the green, right? We were up 33 cents today at 3.54%, closed at $9.66. Pretty solid day. Obviously, you can tell that there was some fighting going on. The shorts were using the last of their resources to try to suppress this price action. But you could certainly tell the bulls were in charge from the moment the bell rang. So, great day. Always could be better, right? But very solid day. Nice start to the week. And I believe this is just the beginning, folks. So let's start out with a little quote today from Muhammad Ali. Rumble in the jungle, right? Don't count the days, make the days count. I see a lot of social media chatter about when is it going to happen, how long do I have to wait? None of us know that. None of us know that. But the key indicators, the facts, everything else lining up, I do believe it will be sooner rather than later. I believe positioning yourself for the squeeze is essential. Just my opinion, not financial advice. If you can buy a fractional share, it matters. If you can buy one share, it matters. If you can buy 5 shares, it matters. Every share matters at this point, and positioning yourself in the most positive way possible is what you can do with the days leading up to this. So make the days count. Great news today coming out of New York. New York City, the capacities have been lifted to now 33%. So congratulations to everyone in the Big Apple. Now you can take more people to AMC movie theaters, right? That's awesome. So congratulations. I believe this is a continuing trend throughout the country, throughout the world, internationally. So this is great news, and I believe New York City, LA, leads the charge, and other municipalities and states will continue to follow this lead. So let's get shorty, right? So as of today, there was one more institutional owner that bought in. That is one more than Friday. Every day there's 1, 2, 3 more institutional buyers coming in. The existing institutions are increasing their positions daily, some very substantially. But overall, this stock is 100% owned when you put the retail investors, institutions, mutual funds. It's at 100%. We are approximately 80%. So the shorts have to work around us, right? We're buying and holding. They are just running out of resources. That's just the facts. Total volume today was about average to where we've been over the last couple of weeks at 32 million. Short volume ratio at 32%, which is still very, very high. My personal opinion is that is still understated until some of the synthetics are settled into real shares. Short borrow fee is we're in credit card interest now, right, folks? It has gone up 2.93% since Friday, and it is increasing every moment. Every time the system refreshes, it seems like it goes up a couple of tenths, right? This is not sustainable, folks. Again, this is an annualized percentage. However, they are not going to pay this much longer. I do believe it is going to continue to go up before the squeeze. I can't tell you how high, but I do believe they're going to continue to endure some additional pain But at the end of the day, I do believe that the squeezing is inevitable. It is going to happen. It's not a matter of if, but when. Um, the balloon is about to pop. Short shares available at the time of this recording was 100,000. Very, very low. Utilization is off the charts. Last I checked, we were around 99.4%. Again, it is right at the brink of the balloon popping. Again, none of us know when, but we are all eagerly anticipating this in the coming days and the coming weeks, right? What I want to do now is just remind, especially some of the younger viewers that are watching this, what an actual financial collapse looks like, what a banking collapse looks like. And this is from 2007, 2008, during the housing crisis. There were a ton of financial institutions that were extremely affected by that financial collapse. It was not a fun time. Um, you could make an argument that we are facing a similar bubble at this very moment, especially with the hedge funds. We do not know how many banks are involved in this, but margin calls could start the domino effect. So this is a look at the Citibank chart from that time period. And if you look prior to the collapse, it was trading at $570 a share. At its lowest point in the collapse, it was at $9.70. I don't have to tell you how substantial that is. It was bad. Let me give you one more example in the financial sector. So this is AIG. AIG, prior to the collapse, was trading at $1,223 per share. At the bottom of the collapse, $5.35. Just imagine if you were invested in this position. These days were bad. And the truth is, this stock has not recovered to its pre-collapse levels to this day. This is what financial collapse looks like for a financial institution. None of us know how many institutions are involved in synthetic shares, failed to delivers, short positions, over leveraged. We just don't know. But Archegos was a recent reminder of what previous events look like. And this is the reality of what happened in 2007, 2008. To remind people who went through it and to show the younger audience what financial collapse looks like for a large financial institution. So I believe our opponent has shown us their point of no return. I believe that point of no return, in my opinion, not financial advice, is around $14. When we were trading in that area in mid-March, we were trending up. There was great news around Godzilla versus Kong. Reopenings were occurring. Los Angeles and New York reopened. Sky was the limit, right? And then the hedge fund said, nope, not happening. They knocked it down, and they knocked it down severely. The FUD machine started in earnest. They have shown us, I believe, their pain point. They've shown us where this cannot go before it squeezes. That bar may have come down. It could be at $12. It could be at $13. But I do believe history repeats itself. What I am seeing in the indicators, like many of you, the moving average is now starting to turn around and become more bullish. The MACD is very close to doing a bullish crossover. I do believe we are going to trend back towards that $14 area, if not this week, possibly next. I do believe that that red line is one that we have to cross to initiate the squeeze. They have shown us where they cannot allow this to go past. Just my opinion, of course, not financial advice. Ladies and gentlemen, we chose a winner. We chose a winner of a company. We chose a company that loves us back, a CEO that loves us back. AMC was very fortunate to have the apes, the diamond hands, all of the retail investors that believed in this company, that believed in our culture, that believed in our social freedoms, that believes in 100-year-old company. Many companies didn't make it through the pandemic. And this is a short list of many. And sadly, although they've been struggling for many years, JCPenney filed Chapter 11, Neiman Marcus, Guitar Center, Tailored Brands, GMC, and Steinmart, among many, many others. AMC never filed. Did they get close? Yes. But the executive leadership of AMC guided that company through its worst days. We helped them climb the mountain. We helped them save AMC Theater. For that, we all should be proud. With that, we should all continue to fight. We will not give up, I do not believe, until we see this through. There is no scare tactic. There is no FUD. There is no price manipulation that will shake the shares from our hands. So one last quote from my favorite actor. If you want a guarantee, buy a toaster. I think that's pretty simple to understand, but you put bread in a toaster, it comes out toasted, right? Every time. And by my favorite actor, Clint Eastwood. So there's a lot of people looking for guarantees, looking for, absolutes. We're going to have to earn this. If we want the squeeze, if we want the company to survive, if we want life-changing money, if we want to support our families, we have two methods to do so, and that is buy and hold, ladies and gentlemen. Not financial advice, of course, but those are our two best weapons and methods. It is proven. The hedge funds and others have to maneuver around 80% of the apes. We don't have to do anything except buy and hold. It's a very simple formula, right? But there are no guarantees in this. We will have to earn it. So, ladies and gentlemen, I want to thank you again for watching. If you enjoyed the video, if you found it informative and entertaining, please like, share, and subscribe. I would certainly appreciate it. And as always, I hope your life is full of green candles. I hope everyone has a wonderful night, and we will talk to you soon. Take care.